afternoon, traders, and welcome to today's daily market review. It is Thursday the 2nd of July. Now, as many of you will know who have visited the site, the strategies and techniques that we use here at Train to Trade can be applied to any market and any time frame. Now, we typically use a special combination of Elliott wave analysis, harmonic pattern recognition, as well as advanced Fibonacci price and time analysis. We would generally look at 2 to 3 time frames when we are looking at a setup. Now, what we do is once we've found a potential market, we will break the chart down into 3 distinct parts. Now, those 3 parts being pattern, price and time. Okay, so what does that mean? Well, in terms of pattern, we would generally look for the AB equals CD pattern, which will be well known to those of you who study and use Elliott wave analysis. And we also typically look for the common harmonic patterns such as the bat, the butterfly, or the crab. Now, once we've identified a pattern, we will then look to apply advanced Fibonacci ratios to the price action. Now, what we tend to do is that we will use multiple anchor points from multiple time frames, and we will bring the ratios together, and we will look for a confluence of 3 or more ratios within a relatively narrow price range. Okay, once that's done, we will then do the same to the time axis of the market. We will apply Fibonacci ratios in terms of time cycles. So we will measure, for example, the distance between high to highs, high to lows, and we will break those down using Fibonacci ratios, project those out into the future, and again we will look for a confluence or a cluster of dates that fall together within a relatively narrow price range. So in this example, we're looking at the FTSE 100 stock BABCOCK International, and we have a clear Elliott wave pattern. We have wave 1, wave 2, wave 3, and we're entering what looks to be wave 4. Now, for those of you who again are familiar with Elliott wave, the wave 4 is a correction, and we would typically look for a complex correction or an AB equals CD, which is a 3-step pattern. So in this case, we can see that we have the A leg has developed, and then the B, and we've had the point C fall into our Fibonacci zone of 1068.76 at 1064.19. Now, the clusters that you can see in terms of the Fibonacci price clusters, these have been created using techniques that we teach here in our course. And what they do is that they find high probability areas for price reversals, again in all markets and all time frames. So in this instance, we have 3 distinct zones. Again, we have our first zone, which we can see our BC leg has hit at 1068.76 at 1064.19. We then have our second zone, which is at 1051.32 to 1050.73. Now, the third zone I haven't marked off because it looks like the reversal could be well underway. Once we have a reversal, we will first look for an area where the market would have to penetrate before the high probability rally or the continuation of the trend will continue. Now, the fact that the ABCD pattern has entered into our first zone at 1068.76 does not necessarily mean that a reversal is imminent. We still want to add some other factors which will help to increase the probability and also the time of the reversal. So, as stated before, we will tend to add Fibonacci ratios to the time axis of the market, and we will do this by measuring the cycles. So for example, we will simply take some low to lows or some low to highs, and we will measure the distance between those using Fibonacci ratios, and then we will project those out into the future. So in this example, we have a total of 4 ratios or 4 cycles that we've measured, and what this has produced is a very narrow date in terms of the 7th and the 8th that a high probability reversal will take place. Okay, and you will find when using these techniques that they can be remarkably accurate in terms of not only the price reversals but also the times. Okay, so in this scenario where we have a clear ABCD pattern which is entered into a high probability Fibonacci cluster zone, and then we have the dates of the 7th to the 8th of July. Once all these 3 of these components come together, we would then drop down to a lower time frame and we would look for some type of entry. Okay, now this strategy can be done with or without the use of indicators. In this case, we have a proprietary indicator which comes with the Dynamic Trader software, and we can clearly see that the market is oversold. Okay, so this is another reinforcing factor that a reversal is highly likely to take place. So we have the combination of pattern being the ABCD pattern. We have price, which is our Fibonacci cluster zone at 1068.76 to 64. We then have time, where we have the 8th to the 7th of July, and we have the momentum of the market, which is currently oversold and crossing to the upside. So again, once this is done, we will drop down to say the 60-minute time frame, and we will look for an entry, whether this be something like the crossing of 2 moving averages or the violation of a trend line. Okay, so if and when a reversal is triggered and does take place, what we will look for is some speed bumps in the road that may impede or stop the rally. And again, we use this by projecting Fibonacci alternate price projections and also retracements, and looking for a confluence. So in regards to Babcock, we have a bump in the road at 1109. Now this is a area of resistance or future resistance that could come into the market once the rally takes place. If the market was to get through this zone, we would then expect the minimum target zone to be the 1.272 external retracement of the ABCD pattern, which will come in at 1176.63, and then the second target will be the 1.618 external retracement of the ABCD pattern at 1207. Okay, so in terms of Babcock, we had the reversal take place at our first zone of 1068. The market is currently trading at 1092, so we have seen a significant rally. In my opinion, the ABCD correction isn't over. I believe we probably moved down into the 1051 zone, which will coincide with the date of around the 7th to 8th of July. So once we see all 3 of these components to come together, we would then be looking for some kind of trigger on our 60-minute time frame, and we were looking to trade the market up from 1051 to 1050 up to at least 1176.63.